What's good, everybody? Today is August 29th. Today was the final trading day of August, and the analysis today was super clean, but there was no great execution, which is why there was no trades taken today. So without further ado, let's just hop straight into price. All right, so checking out price, we can see a little bit about the analysis we did today, but let's just go ahead and do some top down, right? So yesterday, we ended up pumping and taking this external draw over here on ES, right? So ES takes this high, and yesterday for a small period of time, we were at all-time highs, right? And then in the overnight session, we start generating liquidity to the upside, which I expect this to go get ran later. And then from there, we start displacing back in the range. Now, keep in mind, NQ was looking much weaker, and it was pretty much all from this Powell news jump, right? And this is how the market manipulates, right? When they know this entire structure is going to happen, right? The algorithm knows, right? So when they do something, when they have Powell news, what do you think moves the market when Powell speaks, right? The algorithm, right? So they move NQ significantly less than they move ES, right? Which ES displaces all the way back past this high. NQ barely doesn't, right? So that shows us that they are manipulating ES higher while leaving NQ back within the range, right? Because they want NQ to be weaker. So if we look, what that does is it end up placing a bigger time frame SMT sitting right about here, right? So SMT in the bigger time frame, SMT in the bigger time frame. Now we open the market and we see the consequences of that SMT, right? So what that SMT does is it ends up giving us a displacement back into this range, right? So now we see displacement back in the range, and we're not sure if this is going to now be a bearish day or anything until we see a change in the state, right? So looking on NQ, the weaker one, which we expect to be further pushed lower because we now have a bearish SMT on top, and it's the weaker one in the SMT. We see that change in the state happen with displacement, and for value gaps get opened up in the leg, right? So this becomes manipulation, a little bit of overnight inefficiency, and then we start to see displacement back lower, opening up two for value gaps right here, right? So now this becomes imbalanced price action. When we watch the morning, well, what does the morning do? The morning, right before market open, we start to just generate liquidity, right? And we had some kind of red folder 830, was it red folder? I'm not sure, but we had some kind of 830 news, right? And if we look, after generating some lows, generating lows, taking lows, we end up placing in this big candle, right? Now, you guys know what we like to do on news candles, right? This candle wasn't the biggest, so probably not the best way to use this, but I like to market a range, right? And I want to see one side of that candle get taken before potentially trading a reversal, right? So looking at this right now, we're looking and we're expecting the market to now open and continue dumping lower, right? So looking at this, we have 15-minute change in the state sitting right about here. Over here on ES right here, we have the change in the state. This was super clean, sitting right here. So now if we look, let's zoom out to an hourly time frame. After seeing this bigger time frame SMT get put in, this tells us that we are now expecting this to become sell side of the market maker curve, right? So looking right here, this becomes that low. So marking that in, this becomes sell side liquidity right here. And then we can expect to see a super efficient sell side of the curve after the SMT and the manipulation and the efficient day that we had today, right? Now, why would the market want to move lower? There's two bigger time frame reasons, right? Number one, right here is imbalanced price action. If we go ahead and we zoom out to, like right here, a daily time frame, you can see that we have a daily for value gap right here. And if we went on the lower 4 hour, we have a same for value gap, right? This becomes an area of imbalanced price action where price, if it wants to rebound back to, you could potentially want to go back there. As well, we have equilibrium and OTE of the range sitting much below there, right? So if price wants to rebalance the equilibrium OTE, it has to move lower. And then as well, we have the bigger time from SMT giving us bearish pressure, and now we have that change in the state on the 1 hour. So that validates us to go ahead and run the newly generated liquidity. All right, so if we look, that market maker model now validates us to go ahead and run all of that generated liquidity, right? How do we spot generated liquidity? It's simply by looking for like subjectively stacked and equal lows, right? So we have low, low, low. We have two like very relative equal lows sitting right about here. We have low, 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 low. And another thing to look at is if we have any imbalanced price action, it gets tapped back into. So look, imbalance gets tapped back into, imbalance tapped back into. Now, since we saw it tap back into once in a low place in front of it, and now becomes fuel, because think about this, if we're taking long positions, right? Long positions, sell stops go right here. Now, when we see a bearish move come, sellers are in control, right? So when we go ahead and we take all those sell stops, we stop those traders out, we go ahead and just tag in more support for our side of the market to continue pushing lower. So that's the low resistance liquidity you want to explain, right? This is a perfect bigger time frame model, right? And by the way, that's why we saw such an efficient straight down dump move today, is because the bigger time frame was aligned with the smaller time frame, right? So our job then is to just zoom in and trade it. So looking lower, we have that 830 news high put in, like we said earlier, and that puts it in a range, right? So now on open, the only thing I want to see is two things. I want to see a form of manipulation higher to give me an entry to trade this internal model that has the bottom of the curve resting right here. So this is where I want to take my first take profit, right? I want to see manipulation at this high, right? To go ahead and enter me in and give me some kind of trade opportunity to get involved to then go ahead and trade that internal model. And then from there, I want to leave this internal model trade for runners down to this external draw, right? So looking in, where was my potential entry? So when we have this news draw on liquidity, this is a very strong draw on liquidity, right? And it's a teller that shows me if the market wants to go and it's going to manipulate. Usually we want to manipulate some side of this candle, right? So this one really big 830 candle from news, usually this is going to be a strong draw on liquidity on either side, right? So the thing I wanted to see on open today was we opened the market right about here at 930. And then we go ahead and I want to see something like this, right? We tap this, generating more liquidity on the way up, by the way, displace lower, give me my entry, and then we go straight down to the end of this model for a super efficient run. And that would have been beautiful if it played out. However, it didn't. So I'm not going to simply sit here and force price to do so, right? Now, we saw internal manipulation right here, but it wasn't on that news draw, right? So are you okay taking a trade like that? I am. However, the only issue I didn't take a trade because keep in mind, we're also reacting, right? I'm not predicting that price is going to go sweep that high. And then if it doesn't sweep that high, I'm not going to trade it. I'm fine taking a lesser form of it if the market goes off of that. We can tell when the market's going to go. If we see that change in the state with displacement, that tells us the market is going to go, right? So when we see this change in the state at 929 or at 930, I'm confident the market's going to go, right? However, I don't trade it because if we look, we get displacement, we get inverse for that gap, we get power off through right here. We have accumulation right here, we have manipulation at this high right here, and then distribution lower. Really clean setup. However, I didn't trade it because it happens at 930, right? And at 930, we know there's an injection of volatility, which tells us the market could go ahead and just do this, right? Stop us out and then go, right? So if we're trading this, right, and we place our entry at right here, changing the state, and then stop at this high, and then we go ahead and we look for the bottom of this model, super efficient trade, right? This played beautifully. However, we don't know if the market wants to open, stop us out, and stop every other trader that took this out with that new injection of volatility and then go, or we don't know if it's just going to dump. So the best opportunity here is either accept the risk that you're putting on the table by taking that initial trade, or just don't trade it at all, right? So you can either choose the risky way or the peaceful. I'm not going to trade it because it's not the best opportunity way. And that's what I chose today. I didn't like this trade because it didn't go ahead and sweep this external draw. But you bet if this did go ahead and sweep that, the analysis was on point, everything was on point, everything was beautiful, I would have gone ahead and taken that trade. So really no ways to get involved in this move or take any kind of trade. Really no setups at all, anything that's not chasing price until we went ahead and took this level right here. So what happens, right? We go ahead and we take that level on NQ at about, when was this, 10:15 with a really shallow dig. And then we don't end up taking this on ES, right? Two things. Number one, when we have a big target like this, where the model and everything says, okay, we are going to this level, and we also have a bigger time frame draw on liquidity below that, which is right here, which we still haven't tapped, right? So when we have those two things in place, that number one tells me, okay, if we get a shallow dig, which right here, what I mean by shallow dig is if you look, price literally tapped this and went like a couple points lower, price went literally a tiny dig into it, right? If price is going to tap this level and absorb all of the orders, it should displace through it relatively down to here and then do our accumulation, our manipulation right here, which we saw right here with our SMT, and then the distribution higher, right? If price is going to go ahead and tap that level and actually take full advantage of all the orders and dry up all the liquidity at that level, because that's what a liquidity sweep is, right? If a liquidity sweep is going to happen, it should have taken all the power and the orders and all the liquidity from that level and then used it to distribute price higher. It's AMD. Everything's AMD, bro. But if that's if this is going to be a true liquidity sweep, we should push lower into it. So when I see a shallow dig and a retracement back, there's a couple things that I need to see in order to take this short right here, which I didn't end up taking, but this was the same setup as yesterday that I ended up losing on, right? So we see shallow dig. Now price tells me it wants to go back into a higher time frame fair value gap or whatever, right? We wait until this 15-minute fair value gap is opened up, right? And then we start to see some bearish pressure. Now, I already had this trade thesis in mind the second that I see this shallow dig and a bounce. Why is that? Because we see the shallow dig, we see the SMT. It tells me, why are we seeing an SMT on a point that the bigger time frame tells me we should go run through this point on both indexes, because this has a draw on liquidity that's past this, right? So this point shouldn't matter. If we're going to see an SMT, it's going to be on this bigger time frame draw on liquidity, right? So when I see shallow dig and then I start to see lethargic move to the upside, right? That is moving pretty quickly, but it doesn't have the juice, right? That if I want to see a long setup, the thing I need to see is generated liquidity on one side in a fast, efficient move to then go ahead and displace past the change in state level, which we barely end up doing. And then I want to see a move, right? So when I see price doing this, it's like, okay, yeah, we have a potential long setup maybe to this high. But then when I see this pullback, it tells me, okay, yeah, price is pretty lethargic, and I'm expecting this to now be a high resistant liquidity run, right? When we see high resistant liquidity run, it's because we're opposing low resistance liquidity, right? So look at this. The market is moving in a downtrend. Whenever we move down, we move low resistantly and very fast. We leave for value gaps in the leg, and we don't really tap back into every single one. However, when it's moving higher, we move slowly to move the same distance, this took 1, 2, 3, 4, like this took pretty much like 10 candles to move this entire distance right here, where if we go over here, this took about 30 candles. So it takes 3 times as long for price to move the same amount. And as well, every fair value gap or inefficiency or whatever we place imbalance, we place in that leg, we go ahead and we rebalance all those imbalances because price right here is acting inefficient, right? There's no move. It doesn't have to move quickly. It just has to accumulate before manipulating and then distributing, right? So that's what price has to do. So this is all accumulation. This is all the start of a market maker model. This becomes our buy curve, right? And it tells me, the thing that told me is 3 things. It's that first, that shallow dig, right? The shallow dig in the SMT is telling me, okay, market could be trying to trick us here. It doesn't want to bounce off this level. Why would it bounce off this one sell side level when we have bigger time frame sell side, major sell side sitting below us, right? That's what that tells me. Second thing, when I look at if someone was to take a long here, I always ask, why should the long play out? And I always think, okay, is narrative aligned? And then also I think, is structure aligned? And we can tell if structure is aligned by simply asking this: what are the enemies to price moving higher? So if price is going to move higher, do a big ass move like this, the enemies to price are going to be all the different time frames imbalances in this leg and all the imbalance price action that's within this leg, right? That's going to be the enemy to price to moving higher, right? So are the enemies strong enemies or weak enemies? Right here at this point, or yeah, right when we're about here, the enemies to price moving higher are very strong. It's a whole morning move of imbalances, right? It's complete imbalance price action. Price needs to go, if we took a long that plays out, price would have to do some really crazy stuff, invalidate every single imbalance to end up hitting us at our TP, right? And that's just not a high probability setup. So that's why we're not trading it. So we're expecting to see that lethargic move higher and all this stuff, right? We expect to see price get beaten by one of its enemies right here. All these buy orders are absorbed at this level. Why does it get absorbed on this level? Is because right here at 1030, we open up the fair value gap, right? We tap back into it. We make a manipulation leg. We rebalance to this leg's equilibrium right here and to the imbalance. I was in this leg, I think it's like a 2-minute imbalance or whatever. But we rebalance to that, and then we make this becomes our manipulation leg right here with an imbalance in that, and then we run that imbalance. We make the change in the state right here, and then from there we go ahead and we dump, right? Now we didn't dump here because number one, we hadn't generated enough liquidity at the lows yet. Time and price weren't aligned, and this barely aligned. We're printed about 1050. I usually want to take a trade in 1050 macro if I'm really taking one of these trades, right? But just during macro time, but we didn't get that in macro time. But I'm still not picky, right? It still could have been a good setup. So you see, after that, we see enemies, price gets absorbed, and the higher resistance liquidity. Then I want to see that displacement, right? Right when that 15-minute fair value gap gets opened up, price taps it, and I see that displacement. I'm like, okay, yeah, this is the time that the model wants to go. So I see displacement past this level, change the state right here. That's where I place my order. If you wanted to trade this, you could have gotten a 1.47R, the way I traded it or something like that. Yeah, so 1.37. It's really not the best setup in my opinion. If you would have traded this on ES over here, you wouldn't have gotten tapped, which in my opinion is kind of sad because the ES one was really clean. Nice displacement, nice everything. And we had this low to hunt right here, so we didn't end up getting anything, but I thought that was a pretty clean setup if it would have got tapped. So that was, in my opinion, the best setup of the day. And if you look, the whole reason that this happens is because we have to put in a bigger time frame manipulation leg, right? So we now protect ourselves against 2 biases, right? If the market is going to move higher from this point, I'll delete everything really fast. If the market is going to move higher from here, right? We're at this point right now. If the market's going to move higher, what it has to do is this. It has to go ahead, rebalance, go lower, manipulate lower. This becomes our new manipulation leg. Then we have to displace through that manipulation leg and then go lower, right? If the market wants to go lower, what it has to do is this. It has to rebalance right now. After taking this, it plays ping pong, ping, and then pongs off of one of these imbalances. Then it has to continue pushing lower. So this, the only similarity between those 2 moves, if you look, I'll draw this one out again, is that move lower. It's this move right here. So that's why no matter what the bias is, taking that internal model trade is always going to be protected, because no matter what the market wants to do, we can always get some kind of move when we do that kind of trade. And when I say always, I mean a very high percent of the time, because that's just how price works, right? If it wants to manipulate, do AMD, you pretty much always are going to be guaranteed that manipulation leg if any of these 2 similarities or possibilities are going to play out, right? So that would have been the trade today for me. There was some kind of long setup. I thought it was okay. After we swept this level, we made SMT down here, and then we ended up going a little bit, and we didn't end up taking a high right here, but I still thought it was pretty clean. If you took this, I think it's clean as long as you take it off at one of these internal highs, or if you took it off at a standard deviation level, I think it's fine. Your trade would have been something like this right here, standard deviation. I mean, you couldn't even have gotten it 2. I mean, I think it's okay. I don't know what you really would have taken it off at, but however you did it, if you got some take profit, that's nice. If you took it to this high and then ended up getting break even stopped, I think that's fine too, as long as you trade and manage the position and you didn't end up taking a loss on this. Because once price hits its objective down here, we expect consolidation, right? So if you want to trade somewhere in this range, your best opportunity is to look for some kind of in between the range, like take a take a profit at a level that's like a breaker block, something like that. Whatever ends up looking right for you, go ahead and take that, because we don't expect buy side or sell side to really get taken for a while, right? And once it does is when you actually start to see an efficient move. So if we look, once sell side gets taken again and an SMT gets put in, that's when we got this really nice extra long setup. That was later in the day for PM session. And then from there, everything else was just straight chop, bro. So I think those are the two setups from today. If you took that 930 open short, I mean, you bankrolled today, good job, I guess. But just go through and make sure you understand, was that the kind of trade that I thought it was? Was I happy taking that? All those kind of things. Use this analysis that I put forth in the video of sweeping buy side and all that kind of stuff, the news candle, all that kind of stuff. See if your trade, in your opinion, was still valid after learning about all that stuff. And without further ado, I think that's pretty much all to look at today. It was a pretty interesting day to dissect price action and understand how price is fractal. Because if we look right here, another thing, this same setup we traded right here, where we see that shallow sweep at this level, and then we end up seeing manipulation leg, and we can trade that manipulation leg. If you look right here, we do the same thing. We sweep this buy side level, and then we push higher into an imbalance, and then we push lower, right? This is the same thing that we see on the 1 minute model, on the 1 minute chart, on probably like a 5 second chart. So zoom lower, and I'll show you guys exactly what I'm talking about. I mean, right there, that's beautifully clean, right? We come up, we probably tap equilibrium of some kind of range open into an imbalance, right? We go and we 5 second change in the state, tap this change in the state, and we end up trading that to the bottom of this low. I mean, literally just a beautifully efficient trade. And of course, I don't recommend trading the 5 second chart. I never do, because I think the 5 second chart is just too zoomed in, where structure doesn't really get communicated clearly, and there's way better, like, you can get faked out so easily in the 5 second chart. So I think maybe just zoom to a 15 second probably could have given you this. If you want to trade this, I still don't think it's the most A+ trade, but the point of showing you guys that is just showing that the concepts are literally how the market has to move. Like, market maker models, AMD, are the truth about what the market does: accumulation, manipulation, distribution. That's literally how price works. It's narrative, it's structure. Price makes so much sense once you start learning these things, the reasons why the market moved. You start learning the interplay between narrative and structure, which is what I'm going to make a video on this weekend, so stay tuned for that. And all that kind of stuff is when you start to really understand, like, okay, wow, I get why price did this, I get why price didn't do this, and you start realizing you never don't understand why the market did something. And the times that you take a loss are like a reason where you know, okay, yeah, I did something wrong, I probably shouldn't have traded this, or it was kind of too risky of a trade, or something like that. Like, you really always should understand that the market should have done, like, you understand why the market did everything first. And there's always still that probability of losing whenever you take a trade, but it's severely lessened once we actually get the market. And when I say get the market, all this kind of things, I'm not talking like understanding every ICT thing to ever come out, right? You don't have to go watch every single ICT video. Like, it's not, you're going to get analysis paralysis just by analyzing too much. It's just not going to be good for you. I recommend that you go ahead and you find a mentor who you love, and you binge all of his concepts, and you find one who's profitable, has students, all that kind of stuff, right? You go ahead and you binge everything that he has to show, and you develop his brain into yours, and then from there you run with it, right? If that mentor has such a great system, you should be able to run with it and think every question, everything has an answer within a system. And that's what you have to do. That's what you have to find. And that's what makes trading so easy and actually gives you a fluent understanding. So hopefully you guys like the way I break these concepts down. If there's any questions you have, anything you want to go over in another video or whatever, just drop a comment and I'll be the first to answer. So thank you all for listening. Hope you guys enjoyed the video. Hope you guys learned some stuff and can actually apply to your trading and change your mindset, all that good stuff, right? So without further ado, I'm going to let you boys go. Peace out.